Alrighty, so this will be a quick trade recap from the position I took on the AUS200. This was a short position that ultimately didn't go in my favor, but one that I did like nevertheless. So starting with the monthly time frame, we've got the nice extension up into the highs. Nothing really too much to say other than we hit that 8,500 nice psychological round number. Nothing too huge, and overall the monthly is trending to the upside. Weekly time frame as well, quite overextended now, and showing still a relatively bullish market structure. There's nothing to say on the weekly that this is coming down yet. However, what I did like was that we had this really clear head and shoulders pattern on the daily time frame. So when I saw that bearish engulfing close back down that through that 50 EMA and this nice region around here on the daily time frame, that was to me a nice indication that the path of least resistance is most likely to the downside. We had the wave 1 breakdown, the wave 2 retracement, fake out above the daily 50 EMA back below, and now I'm looking to take that back down to the recent lows and that weekly 50 EMA. So decent directional prediction here, and I didn't mind it. There is always the added risk of shorting an index like the AUS200, as they're primarily very strong to the upside. Another negative confluence factor is that we had that double bottom here, so that bullish structure of the higher highs and the higher lows was still pointing for further upside. Now stepping down to the intraday time frames, this is where the execution was taken. Off of that right shoulder, sorry, on the daily head and shoulders, we then had this wave 1 breakdown, wave 2 retracement up into that 4-hour 50 EMA. So this was a complete breakout, and I was looking to capture wave 3 down to the recent lows. So we were back below this 4-hour 50 EMA. We also had another head and shoulders here on the 4-hour time frame, so a head and shoulders within a head and shoulders as an additional confluence factor. And we eventually had the nice retracement and the nice high test candle rejecting that region here at around 82.50, 82.60 if you will. So once we got that 4-hour high test here, I was looking at the 1 hour time frame, which was forming this nice ascending wedge. And once we had that double top rejecting and taking out the previous highs, the bearish engulfing, that to me was the sign and the indication for entry. This also lined up nicely with that 15-minute 50 EMA breakout. We took out the recent highs, came back below the 15-minute 50 EMA, took the entry, and went short. So it was a decent position. We did have relatively good risk to reward ratio to the target of 2.72 risk to reward. Stops were quite wide. I didn't really want to make them any wider behind 0.75. That was a bit too much, and 0.618 was a bit too tight. So just a nice in the middle within that region. One other negative on the position was that we had that 1 hour trading above the 1 hour 50 EMA. So price would have to trade through that hourly 50 EMA, which is a bit of a negative confluence factor. But the 4-hour high test, the 15-minute 50 EMA breakout were the two mitigating factors for that. Now, after entry, there really wasn't anything to do in the way of management. Price didn't push down enough for me to justify an entry. Phase 1 risk reduction, I would have done so if price did break these recent lows. I would have then clipped my stop behind these highs here. But unfortunately, that didn't happen. We just came all the way back up into drawdown, and then some volatility took me out for a full loss. So minus 1R on this position as well. I take it again. I did like the position, fairly aggressive shorting at AUS200, but I think the setup was there, and I'm happy with the way it was managed, entered, and exited. So I'm going to box this one off. Thank you very much for watching, and I'll see you in the next one.